Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. There's the home page. Yesterday, another great day, defying gravity, it seems. Okay, front and center, there is a full recap with some China and London comments. We unlocked that. Just wanted to get it out there to everyone. We might be at a little bit of a short-term crossroads here. All right, let's start with the markets. 10-year yields are 412, 413, down 1. The dollar is 97.76, down 17. The S&P 500 is 66.48, down 7. The VIX is 16.5, up 48. Gold is down 17. Stronger last night on the China opening. Weaker starting at about between 2 and 3, maybe between 3 and 4. Silver down 76. Off its lows and off its highs. Copper down 66 basis points, 3 cents. WTI 62.40 down a buck. Wow. Natural gas 303 up a penny. Bitcoin 113 spot 0 down 1200. Ethereum 4164 down 53. Palladium down 33. Platinum down 39. Gold, silver up 94. And soybeans, corn, and wheat all down pretty much uniformly. All right, so having digested that, nobody's buying industrial commodities with a big emphasis on metals. And that tells me China was bought out of the gate last night and now it's weaker. Okay, so people were buying before the holiday. In China, there's one of two types of buyers, either short covering or buy orders coming in. I'm going to guess it was short covering, buying before the holiday. Nobody wants to go on a 9-day holiday. They pretty much honor that, at least at the public level, short, and have to come back and find out that there's allocations to buy more gold, and they get run over. So shorts covered. And once the holiday started, that buying dried up. So we'll see what happens in the US. Now we're on US terms, which is macro. It's all about data and dollars and shutdowns, right? So that's where we are now. Which brings me to this. All right. These are my notes. We are 5 weeks in to the purest weekly Bollinger Band volatility buy signal I have ever gotten. Cleanest. I've never seen something this clean in gold, especially. My goodness. It does not get much better than this. And then I wrote, these are notes to myself. Be smart. They aren't always this good, meaning the next one isn't going to be me being a genius. It's going to be me getting stopped out. Play with house money if you're speculating. And I believe that. So do you want to stay long? Yeah, you can stay long. If you're 1 week to 6 month time frame, if you're a 1 day to 1 week time frame, well, know that you're betting on a coin flip as we go into the shutdown event horizon. There are many events happening. Now, in the past, we didn't talk about events here all the time. And the reason for that is because we're long-term oriented. But when macro discretionary gets involved, you may not want to trade on what they're doing. Who does? I mean, they're bigger than us. But you certainly want to feel like you understand what the hell's going on rather than just opening a YouTube channel that says gold's going up, it's going to go to 4,000. So maybe you want that. Who doesn't want that once in a while? And I do it once in a while. Let's see. Assume the worst in terms of price action if you're a stacker and turn the TV off. We have the quarter end shutdown, Chinese holiday, US ETF buyers, unemployment. This macro data matters. It matters now. It didn't used to matter because no one cared about gold because it was a pet rock. That was a Keynesian proxy for the dollar. What's the dollar doing? Well, then gold's doing the opposite. But now it's its own commodity and it's got geopolitical, macroeconomic debasement and deficit implications. Oh, We could drop 150 and still be okay. Now, why did I say that? Let's see why I said that. All right. So there's the Bollinger Band, week one, week five. Yeah, so it's simple. See where it says 36.78, the yellow line on the right? It's the yellow spot right here. We can go back to 36.78, which is the low of the previous week, and still be in an uptrend, a steep uptrend. So, are you prepared to buy it $150 lower if you're a speculator? If you're not, then you should not be long now. There's no such thing as hold when you're short-term trading. There's buy or sell. Every price is a decision. So I want to be able to buy it $150 lower. And so my speculative position is almost zero now. Bridge and tunnel guys are playing this market right now. All right, so that's how much we could pull back and still be in that uptrend. Just draw a trend line here. We can go all the way back to here and still be in one of these steeper trend lines. Okay, so that's the first thing I wanted to say. We'll come back to that at the end. A lot of cheerleaders out there now, and I'm one of them. And it's tough to keep your head together uh, when there's money on the table. All right, so related posts. Again, another day with a lot of content, a lot of good insights to find out there. There's our full recap. That's probably must listen if you're looking for some insights into the plumbing. Gold and silver retake their proper place. That would be me saying that the U.S. is encouraging gold and silver ownership. To what ends, I don't know, but it's really not your dad's gold. Michael Oliver, silver entering a new price reality. He aggressively changed his outlook without putting it's going to here, it's going to there, but he aggressively changed his outlook and said, we're in the acceleration phase, and that could be very whippy, but upside targets should be flexible now. Founders AM, that was a special note about the monetization. Today, Founders AM, 5 weeks into the buy signal update. That's a more detailed explanation of what we just said. U.S. gold reserves hit 1 trillion in value after record rally. So, I mean, that's it. We're out of gas. There's nothing here. Actually, we do have something to share, but we'll do that tomorrow. In case you missed it, I went back over this post because I had said, here, let me just read this for you. In April this year, I sounded an alarm bell, and the alarm bell was, upon seeing COMEX open interest make new lows as gold made new highs, with China activity surging domestically as well as in Shanghai, they serve as an important signpost on the path to COMEX pricing's diminishing importance, and with it, global de-dollarization accelerate. So we're checking back with that, and that's 100% correct. Rarely am I 100% correct. That's 100% correct. Now, you can't tell me I'm wrong because there's no quantification of it, but I'll tell you why it's correct. China is not just buying during their hours now. China is buying during our hours. And the fact that China is not in the market today, at least in the second half of the day, and we're lower, tells you that China's pricing is projecting outwards. Remember, it used to be up during China, down during US. Now it's up during China, up during US. And now when China's not in, it's down during China. What will happen during the US? I don't know. It's a crapshoot. But the point is, China is now projecting their pricing power outward. This is on my radar. If the economy in China struggles, and I think it's coming out of that right now, but if there's any peace talks that take hold, China will make metal available again. There's going to be a point where China says we're going to arbitrage the metal. There's going to be a point where China says, you know what? That COMEX premium is stupid. and they may sell it. Now, are they going to drive gold down to zero? No, no. What they're going to do is they're going to project pricing power. They're going to say, our price is here. And you'll notice that the arbitrage between uh, London and Shanghai, or New York and Shanghai, I'm talking about gold here. New York and Shanghai is closing at the higher price, closing at the higher price. And that's really good. So coming back to this point here, I'm just revisiting this. I was calling for the death of COMEX, and I still believe the COMEX is dead. The COMEX is basically a big vault for GLD now. As people buy gold or GLD or SLV, whatever's in the COMEX is going to get pulled over there because normies are buying ETFs now. The economy's changing. But what I missed is this was right after we got done repatriating a lot of gold and silver in the first quarter of the year. What I missed is it's London that's emptying out. It's London that's done, which brings me to something that Dan Ghali said several times, probably 7 months ago, the first time he said it. Sleepwalking into a stockout, I think was his alliteration there. And then that morphed into the short squeeze you can buy into, or the silver squeeze you can buy into. What he was referring to is when people talk about a squeeze or a short squeeze, they're talking about an event. It's like, boom, something's triggered, people get stopped out, there's physical tightness, it becomes obvious. But it's never obvious running into it. Usually short squeezes are an overnight phenomena that the market's not ready for. Well, when he said it's a short squeeze you can buy into, he was saying that you can measure the degradation of the London vaults. London's vaults, the free float or the stated free float. I think 7 months ago, he said, Daniel said, in about 7 months to a year, we could have a stock out. That was the term he used, which is a professional term. And his most recent comments were like, we could have a stock out in 3 to 4 months. Now, if you're watching the silver in London, if you're watching the silver in London and you're saying, but the premium is on COMEX, yeah, that's because the COMEX is pulling metal from London. That's because Shanghai is pulling metal from London. You got to have metal flow back into London. So I'll give you some examples. Metal flows into London, perhaps, silver I'm talking about, perhaps if the Fed says they're not going to cut. Look at it an extreme example, right? The silver premium goes away, someone flips the EFP back. Metal flows into London if somebody in the US says, Bill Gates or Warren Buffett say, yeah, I'll loan you my silver, and it goes into London. Metal goes into London if everyone starts cashing in their silverware. But people have been selling silver domestically. They have been. Retail is selling its silver and it's being made into 1,000-ounce bars and it's going to the COMEX and you're never seeing it again. It's not going to London. At least that's what I've been told. So who is going to bail out London, which goes to Ghali's statement? It's a stock out you can buy into. It's a slow motion short squeeze. So just keep all that in mind. I just going back to what I started with here, I was like, oh, COMEX is dead. No one's going to play anymore. It's going to go to China. And yeah, that's true. But you know what? LBMA is in much worse shape. And I can't say I'm not unhappy about it, but LBMA is the old mall that no one goes to anymore. The LBMA, folks, is the table that sits in between all the bullion banks who've been shorting the market for 30 years. And now they've all decided that it's time to buy the market. And now they're moving themselves to China and to the US. And the table is empty. It's not going to last much longer. Anyway, diatribe over. The chat, I'm supposed to break that up. I didn't get a chance to do that yesterday. Today is the Case-Shiller Home Price Index. We care about unemployment on Friday, and this is what I wanted to show you. So here's the key events. They're key events for gold now. September 30th, that's today, the China holiday starts, Golden Week. October 1st, U.S. government shutdown deadline. I don't know. October 3rd, U.S. unemployment. That's big, and they're all big, right? But in the last unemployment, I said it doesn't matter. Inflation doesn't matter. In this unemployment, I'm saying inflation does matter. Meaning, if unemployment is strong, that will implicitly mean the Fed can say, you know what, I'm going to pull one cut off the table. And the markets may react to that. But if unemployment's weak, macro discretionary is going to buy it again. Macro discretionary is not buying for the shutdown. That's bridge and tunnel. That's tourists. That's people like me. All right. October 3rd is what they're buying for. And October 15th will be the icing on the cake because October 29th is the Fed decision. And then October 31st, Trump and Xi go trick or treating, and we'll see if there is any sort of a summit or meeting of minds headed into China's plenum, which is always interesting to watch. I'm Vince. If you're speculating now, if you're playing with house money, you're not playing with money you need. Have a great day.